This is ShadowQuant, Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, July 3, 2026, and this is the New York session. Now, let's get into it. Gold is shining as the U.S. holiday reduces liquidity, acting as the primary hedge against a crypto fear and greed index reading of 14 out of 100. Meanwhile, the Nasdaq 100 leads the decline with a 1.7% drop, reflecting broad risk-off sentiment in the technology sector.
Friday's close was defined by a clear rotation into defense. The S&P 500, tracked by SPY, finished at 744.78, down 0.13%. The Nasdaq 100, tracked by QQQ, fell 1.73% to 712.60. The Dow Jones Industrial Average, tracked by Diamonds, bucked the trend, rising 1.05% to 527.88. The Russell 2000, tracked by IWM, declined 0.58% to 297.58.
With the market digesting that heavy tech drag, let's look at the corporate filings and earnings that moved the needle.
Earnings activity was sparse, but the signal from Core Scientific was clear. The company turned lower after its fourth-quarter results disappointed the market, according to CoinDesk. In regulatory news, a defendant has filed to dismiss a New York lawsuit seeking ownership of 39,069 Bitcoin wallets, per Cointelegraph.
While corporate news was mixed, the macro backdrop remains the dominant force. Let's check the economic data. Today is a U.S. holiday, so there are no major domestic economic releases. However, the data we do have points to persistent inflationary pressure. According to the latest Federal Reserve Fed data, the Consumer Price Index, year-over-year, sits at 4.17%. Core Personal Consumption Expenditures, or PCE, is at 3.41%. Both figures remain significantly above the Federal Reserve's 2% target, maintaining hawkish pressure on policymakers. With the holiday limiting liquidity, let's check the risk desk for any unusual volatility signals.
The VIX, or Volatility Index, closed at 16.59, up 0.14 from the previous session. While the index remains relatively contained, the Crypto Fear and Greed Index is at 14 out of 100, signaling extreme fear. This disconnect suggests a potential compression in volatility or a calm before the storm dynamic. Additionally, dollar-yen is consolidating at key support after suspected stealth intervention, adding geopolitical noise to the risk landscape.
That sets the stage for the week ahead. Let's look at what to watch.
3 items to watch as we head into the weekend. First, gold. Gold is the primary hedge today. With the U.S. holiday reducing liquidity and geopolitical headlines swirling, safe haven flows are driving gold higher. Watch for continued strength as the market prices in inflation persistence.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.